Hi, it's Nomi Prince from Prinsights Global, and I'm excited to be here with my friend Shae Russell, who is the executive producer of mining.com.au, who is here from Australia at the amazing Rick Rule Natural Resources Symposium. Shae, so nice to be able to have a couple minutes to actually chat with you about all of the amazing things that you're doing. Thank you.
I'm thrilled to be here. Nearly didn't get here, but I look forward to today's conversation.
Well, let's start out a little bit with your background because you and I go back a number of years. We've met up in Berlin and Vancouver and Florida and Melbourne. We basically have spanned the planet talking about life and gold. But let's hear a little bit about your own personal background and how you got to where you are now.
Okay, so my background, I started out as a finance broker in a truck yard around heavy vehicle and plant and equipment. And that's kind of where my accidental love of mining started. So I would often go out to truck yards, mine sites, and be responsible for assessing what their finance needs were for plant and equipment. Did that for a very long time. I'm sure it honed my swearing skills. I learned some very colourful language working in that truck yard. And from there, I started naturally moving more into markets. Worked for CFD provider for a while, which is a lot like options, but without the expiry. And then I started out as a junior equities analyst for an Agora financial franchise in Australia. And that's where things really took off for me. Not long after that, I began specialising in mining, and somehow they liked what I did and they kept promoting me. And eventually I was the editor-in-chief of several publications there.
Yeah, and I know these publications that you were editor in chief of did super well, and you focused them on some incredible trends that other people weren't seeing at the time.
I was incredibly fortunate. Well, I just think I caught a great gold price rise, but I specialised in micro-cap gold stocks within Australia. That was my bread and butter. I love the geology in Australia, so I was blessed by knowing what call to make. Some companies made me look more clever than I actually am, though.
But you've consistently looked at those opportunities in some of the smaller cap mining stocks. Is that part of what you're doing still?
I still do that now. Yes, I do a lot of work with small to micro cap miners, and I'm very big on trying to get ahead of trends, which does mean you tend to buy companies at the sucky part of the cycle, for the non-professional way of putting it. But I really like to get in early. I have a big picture view and then sort of try and maneuver into what I think are companies that could benefit from that.
And right now, in terms of if you look at the natural resource space, you got gold, silver, copper, uranium, and what's happening globally with more and more mines buying up other mines. Where do you see opportunity? What are you looking at right now?
Oh, okay. So this is where I very much stick to what I'm good at. And what I'm good at is understanding the geology, especially within Australia, and looking for the team that are running those projects. So I'm sort of I'm going to sound like a mini Rick Rule here, and I might have learned a thing or two from him in my time.
As we do.
As you do. But I basically look for the guy, and then I look for the region or the girl. By the way, we've got some great Australian mining leaders out there. So when it comes to certain commodities, I find out who's working on a project, and is that a commodity I'm interested in? I start then looking into the region. So I've been putting my eyes on a lot of great brownfield copper projects. There's some great greenfields gold projects that are happening, and also there's some uranium projects that are coming to life within Australia. So I've sort of been focusing on those lately.
And those are all spaces that have seen appreciation in the underlying commodity, especially this year. We've seen gold up, copper up, uranium up. When you look at the macro picture and what's happening with the projects you're looking at within Australia, how do you see that growing?
I think, look, it's a rough time for Australian explorers right now. Oddly, not as rough as it is for Canadian explorers, but I think our best years are ahead of us. And I think it's really hard for some people to see that. And the reason why I have this view is we're seeing institutional money move into micro-cap stocks. They're buying up significant stakes in tiny little micro-caps, and retail investors aren't. I think this is a very bullish sign. Now, they might be 12 to 18 months or 2 years ahead of a serious price jump, but they're not investing for a market cycle. They're investing for an exploration to company cycle. So I'm very bullish on what's ahead. I just think we've still got another rough year before retail investors catch up on this trend.
Yeah, I agree. And you mentioned something about how, the earlier investors are looking at the main long cycle, whereas a lot of times, you look at TV, you look at NVIDIA, you look at all these things that can go up very quickly, and that's what the expectation is. But you can't do that with mining stocks.
No, you can't. With mining stocks, you need to understand you're buying a company and how that business operates. Now, you do need to turn to experts to understand parts of the cycle better, but you need to understand that when you are moving into mining companies, what phase they're at, and then decide how long you're willing to take that ride for. Because let's be honest, an explorer could take 10 years, and that's a good forecast, especially if it's copper, from discovery to operation. Gold companies are a little bit easier to get into production. They don't take as long, there's less equipment involved, but it can take a very long time. So you can't buy into a metal because the spot price is hot and then try and pick a company to go with it. That narrative, you've got to accept that that company is actually separate from the narrative in the metal prices.
That's really interesting you mentioned that too, because people point to gold, for example, which is appreciated quite substantially, but the mining companies themselves have not appreciated as much.
No, they're really struggling to catch a bid, and it's a shame because there's some great companies doing incredible things. And when I've talked to a few different companies lately, like why isn't the share price moving? And it's just this general sort of depressed market in explorers, in spite of great things are happening. But I think that's more reflective of the market and just not the companies.
Do you think also, or how do you feel about the fact that central banks are buying gold? They don't buy miners. So there is this official bid for gold coming from one particular group of buyers, but they're not looking at the other side. They're not looking at miners. And if that's actually a good sign for long-term investing in mining.
I think it is an extremely good sign for long-term investing in mining, and in particular gold, because central banks are agnostic to the price. They don't care. When central banks buy the price, they only talk about what the premium is. They actually don't even refer to the price in ounces. So they're buying up regardless of what the price is, and we're going to see that increase. Now, depending on who you talk to, there's some rebalancing happening with central banks. Some central banks are trying to increase their gold holdings. Some are just trying to make sure that their US dollar positions aren't too large. But I think retail investors are lagging this cycle. They're not, sort of seeing the forest for the trees, to put it that way. It's overall a bullish indicator for the yellow metal. But when you talk to retail investors, in particular of physical gold, this is a little bit separate to miners, they're selling their gold. Westerners, particularly Western markets, are selling their gold, which is very unusual when we've got Eastern retail investors buying up physical gold and central banks buying physical gold. So there's a bit of a disconnect here. The bull market will eventually catch up. Western investors will eventually catch back up to the bull market in physical gold. It's just going to take a bit of time.
Yeah, it's interesting because a lot of the data that is coming out now is showing, for example, a Chinese retailer buying up physical gold, they're buying up ETFs, and you're seeing that in the West, but not anywhere near the same pace.
No, definitely not. And what's interesting about in particular, Chinese retail investors buying physical gold is a lot of them are using it as a currency hedge because the yuan is falling in relation to the US dollar. Obviously, that's a little bit more managed than other free-floating currencies. But also, an interesting quirk of this gold bull market is that generally Eastern markets don't buy at all-time highs. They buy when there's bottoms in the gold market. So it's very unusual to see them buying at a high and Western markets selling into it. So it's an interesting dynamic that it's going to play out for some time, but we just don't see it very often like this.
It is interesting what is happening with gold. And just two other things before we soon sign off here. How do you feel about silver? I mean, we do see that has appreciated by more than gold this year. And do you have opinions on that?
I have lots of opinions on silver, and there might be some people who never want to hear from me again. I have been a little bit against the grain when it comes to silver lately. First of all, I love silver as a metal. I'm very bullish on silver. I don't think silver as a physical investment is the investing opportunity everybody thinks it is, partly because it can be very long-winded cycles to see price spikes. And when the price does spike, you don't really get it's hard to go and trade your physical silver in to benefit from it if that was what your purpose with silver is. I see silver as having a critical role in the decarbonisation. It's electrically conducive. It's an incredible metal. It's in solar panels. At present, 55% of all silver use is industrial, and that is growing every single year. So there is an excellent case for silver, but I don't think there's an investment case to hold the physical. I think to get exposure to silver, invest in great silver miners. Mm-hmm. There's not many of them, but you take that way, or look at silver ETFs to benefit from price movement rather than holding the physical.
That's some excellent advice, and thank you for that. And finally, you've got something called the Mining Minute for mining.com.au. Can you just tell us where to find that and any information about how to find all your work?
So yeah, basically the mining minute is for this or anyone who wakes up on the Australian time. It's a recap of what's happened in markets overnight, but primarily US markets, because obviously what happens in US markets dictates all the other markets. Goes for about 90 seconds, not a minute. It's but that doesn't sound as good. And you can find what I do over at mining.com.au or over at Twitter. My handle's Shae Russell. That's where it's posted every morning.
Okay, and I look at your mining minute a lot. So I don't count that it's 90 seconds. It's very, very informative. So thank you for doing it, and thank you for sharing your time here, Shae. And that is Nomi Prince from Prinsights Global. Thanks for tuning in.